first off, thank you, Draper Goren Holm, for hosting the LA Blockchain Summit, and a huge thank you for the audience for taking the time today. My name is Aya Kantorovich from FalconX. We're a digital asset trading platform in the cryptocurrency and blockchain space. So today I'm both honored and delighted to introduce our panelists who have added significant discoveries in tech and schools of thought to the digital asset space. So we have Benedikt Bunz, as well as Jesus Rodriguez. So why don't we start off with brief introductions on both who you both are and what you're working on today. Benedikt, do you want to kick us off?
Yeah, sure. Thanks, and welcome everyone. So my name is Benedikt Bunz. I'm a PhD student at Stanford, where I work on cryptography, zero knowledge proofs, privacy, verifiable delay functions, other things related to cryptocurrencies. For example, I was the first author on the paper introducing bullet proofs. And I also am using a lot of this research at my work at Findora, where I'm the head of research. And we're building a platform and a system for really bringing both privacy, but also auditability to financial applications.
Hello, I'm happy to be here. My name is Jesus Rodriguez. I'm a computer scientist by trade. Have had a long career in tech with 10 years as a distinguished engineer at Microsoft, building quant systems in Wall Street, couple of exits as an entrepreneur, became an active investor in different areas of tech, fundamentally machine learning and crypto. And about a year ago, I started IntoTheBlock that is at the intersection of both. So we use a lot of machine learning, deep learning techniques to understand crypto assets, and 18 months after, we have over 100 clients, some of the most prestigious brands in crypto, and go to work every day trying to apply some of the sophisticated research that is happening in the deep learning space to the universe of crypto assets.
Great. So for today's panel, I want to break it into two different topics. The first with regards to privacy, and then touching on data as well. As it relates to privacy, I'd love to dig into some of the challenges you both see today and the pros and cons in terms of how different protocols, projects are approaching privacy in digital asset space. So for context, one example is at FalconX, the way we service institutions and the way that we interact with some of these privacy coins is we're actually not able to service a lot of them due to lack of KYC, lack of data analytics and tracking. And so that inhibits some of institutions and more enterprise clients from accessing these markets, but would be curious whether that use case or other use cases to get your takes on just the overall pros and cons as well.
Yeah, so I guess in general, right, one of the principles of a blockchain is that everything is public and you can see every transaction and track everything. But this, of course, also creates a problem because if you say you receive your salary on a blockchain and it's fairly easy to figure out, say what your address is, then, well, I just simply know exactly what your salary is, and people don't want that. Or if you're a business and you're transacting with another business, then everybody can exactly see, you're buying your GM and you're buying tires, your competitors can see how much you're paying for that. So that's a problem, right? I don't think, and this is different, like this is worse privacy than what we have in the banking world, right? Where your bank knows how much you're sending around, but they don't know exactly, but the public doesn't know, who you're sending transactions to, and the public has no need to know. But then on the other hand, so we have cryptographic solutions to that, and different privacy coins like Monero or Zcash, they apply very fancy cryptographic solutions to this by basically encrypting everything. But the problem is then you're kind of on the other side of the spectrum and no one knows anything, and regulators can't see what's going on, and you can use this maybe for money laundering and so on and so forth. And this is, this also has benefits if you're in Venezuela and you don't want your government to know that you're like sending money around, then this is great for you and this is a beautiful use case. But of course, I think in a more institutional setting, this might not be what you want. But the good thing is, and this is pretty much what we're working on at Findora, is that there is a happy middle ground where it's basically, it's a principle called selective disclosure. you reveal exactly what you want to reveal, but not more. So for example, you might be willing to reveal to a regulator, let a regulator trace the transactions, or reveal to a tax authority, how much you spent last year and so on and so forth, such that you can show you're properly paying your taxes, but you don't have to reveal it to the rest of the public. But this is kind of in general, this is possible, but of course, this is still, this requires a lot of work and a lot of, also very fancy and tricky cryptographic tools to enable this.
So complementing a little bit of that, from my perspective, in my world, obviously we struggle with trying to extrapolate meaningful intelligence from all these super secure protocols, because the level of obfuscation is so much that a lot of the accounting and things like that we try to do, it doesn't make any sense. One thing more from the sort of intellectual standpoint, or more from the macro market standpoint, that probably I can ask Benedikt, because you spend more time in this area than me. I follow it more from an intellectual exercise. Is there's so many protocols that seem to be tackling this type of problem, like cryptographic techniques. They all seem to come from the same school. So you have CK Starks, SNARKs, and bulletproof and secure multi-party computations, and all those things. And it's still, none of those projects seems to have gained like a massive traction just yet. So what's a killer use case for this type of application? And are we when you factor in the state of the market, do you think we're over engineering right now? Because I mean that drives me crazy sometimes.
Yeah, that's a good question. So, well, first of all, I want to say that for you it may be annoying that, like, or for your business, right? It's annoying that you can't trace all of the individual transactions of in say Zcash or in these privacy coins, and that you can't like derive meaningful analytics from it. But for a user of that currency, that may be nice, right? Like they may not want analytics firms to be able to see exactly what they're doing, right? If they have a need for privacy, then this may be, if they're a whale trying to buy a lot of these coins, they may not want a very smart analytics firm with genius machine learning algorithms to predict that they're sending money to an exchange, and they're going to, I don't know, sell a lot of a huge transactions, right? Like, so this is, I'm saying like that this is, there's it really depends on who you're asking, whether this is a pro or a con. As for the techniques question, so well, the answer is, as the tools are complicated, the answer I think is also a little bit complicated. So first of all, what is really amazing is that the cryptocurrency world is really using like state-of-the-art
Cryptography, right? Yeah.
stuff that comes out, like within half a year, it's implemented and used in practice and securing like billions of dollars. That is
because
insane.
where else? I mean, you have all these top, say, cryptographer researchers that are gravitating towards the blockchain world because they can get adoption of these techniques immediately, where in the real commercial world, it would take a decade for.
No, it's a beautiful synergy. I think, I think it's great for science. I think it's great for the space as well. We published bulletproofs, and within like less than a year, it was deployed on Monero. So that was really cool. I think, but like this also means that it's a little bit more messy, and it's not, there's not like one clear tool that you can use, and people are building, the right software on the fly. And I think in terms of killer application, I think in the end, it's going to be mostly driven by demand, right? And it really depends. What are people going to use cryptocurrencies for? And depending on that, there's a lot of different applications. I think, one interesting application is, I think, like very much in the finance space, right? In the finance space, if you're running a hedge fund, if you have a hedge fund, you don't want everybody to know what your trading strategy is, right? Like then your hedge fund isn't like if everybody knows exactly what you're holding in assets, like then they could just copy you, right? This wouldn't be like your hedge fund wouldn't be worth a lot. But on the other hand, you want to, you know, appease regulators, tell them you're only investing into whitelisted assets, or you want to say to your clients, I have a, you know, my assets follow a certain risk profile or something like that. And it turns out that with exactly these zero knowledge, these like the general term for a lot of the techniques that you mentioned are called zero knowledge proofs. And with these zero knowledge proofs techniques, it is actually possible to do exactly that. I can prove to you that my assets, you know, they're all on a whitelist, or my assets follow, it has a certain risk profile or something like that, but not give away any more additional information, like which assets exactly am I investing in, how much am I investing in that. So I think that, yeah, DeFi and private DeFi and might be a very interesting application. And, you know, the more people use it, the more they have a need for privacy. And when I say a need for privacy, I often mean most people don't have a need for full privacy. Most people don't, you know, most people aren't Edward Snowden. They don't need like, they aren't afraid of, you know, like they aren't afraid of the government knowing exactly where their money is, but they have a need for some privacy, right? Most businesses have a need for some privacy. They don't want their competitors to know what's going on. And so, yeah, we need to really figure out how to deliver this balanced level of privacy that we also have in the real world to kind of the cryptocurrency world.
And is privacy like this is a bad way to frame the question, but a tier 1 thing or a tier 2 problem? Like one approach is what you guys did with Bulletproof. So one protocol, or what Enigma tried to do, right? So one protocol that can be applied to multiple blockchains for different use cases. The other one is trying to build your own or runtime with privacy as a first class citizen.
I think, I guess there's one needs to differentiate between the tools. So Bulletproofs is a tool. It's a tool like machine learning is a tool. It's a tool like encryption is a tool, right? It's a cryptographic, like a computer science tool. So many different blockchains can use Bulletproofs. Like Monero can use Bulletproofs. You know, at Findora we're using Bulletproofs, and so on and so forth. The other question is, do I need to have privacy as sort of in the base layer of the blockchain, or can I, like if I'm understanding correctly, or can I, like for example, have it as a smart contract? Can I have like a private, you know, a smart contract that gives me a private token? And that answer is, you know, so for example, can I add privacy to Ethereum? And the answer is a little bit like, it's not clear. I think in theory, you could have in theory, you can run everything in a smart contract, but in practice, there's also basically an efficiency question. Can I deliver, you know, these cryptographic applications? They require a certain level of computation. They're kind of computationally expensive. And running things in a smart contract is extremely, extremely slow. I think I've heard that like the entire Ethereum virtual machine has like the computation power of one computer from the 80s or something like that. So it's like, it's super, super slow. And so for just simply efficiency reasons, it might be necessary, or it's probably necessary to kind of like add privacy at a lower layer, at a lower level. But this is, you know, this is really a very technical question and technical discussion, and yeah, the answer isn't quite clear.
Yeah, I would say, I mean, going back to, you know, the use case, as long as there's a way for it to be regulatory compliant with like bank secrecy and KYC, that's, you know, maybe it's a question of, to your point, it is really complicated, and maybe it's a question of just education around, you know, what are the use cases for these things, and, you know, for folks on the accounting and fund and admin side.
I think Aya, this is an amazing point, because oftentimes like the technical question is like the least, even though it's technically complicated, it's in some ways the least complicated one, and it's a lot about, you know, it's human issues, right? It's regulation itself is something, you know, it's law, it's regulation. You need to educate people, as you were saying. People need to understand it. Regulators need to understand it. So I think part of it is time. You know, it just takes time, and but it also takes like, you know, sort of the technology being ready enough to successfully convince regulators, convince lawmakers that yes, we can do this. In, you know, it might look a little bit. The problem is it's, you know, it doesn't fit in, and this is true for cryptocurrencies in general. It often doesn't fit in whatever regulatory frameworks we used to have, right? It doesn't.
Sure.
Not like this, you know, people like law and regulation things in a certain way, and it's you know, it takes time to adapt it to kind of a new way of thinking. And I think this is very true with cryptocurrencies in general, but especially with privacy here.
There is a side argument to privacy that sometimes I think about. Like we tend to think about privacy a lot from the data protection standpoint, but there is a use case that is very present these days that this type of techniques might help solve. That is scaling of a lot of these blockchains, right? Like the fact that you can take massive amounts of information and encode it into secure assertions that are smaller. You know, it might be one of the things that might help solve the scaling issues of Ethereum and things like that, right?
Yeah, that is true. I mean, this is the, like, kind of the one of the magic properties is that the same property that gives you privacy can also give you scalability. So you can, instead of having to verify all transactions or the entire blockchain, I can sort of give you a short proof that that the entire blockchain is correct, and you only need to check this short proof, and this allows you to scale from, I don't know, 7 transactions per second, or you know, I don't know, some 10 transactions per second to thousands of transactions per second. So you know, we might see kind of a but the interesting thing is that it's exactly the same technology that gives you privacy is the one that can give you scalability.
Sure.
That's you know, we'll see which application there is becomes relevant first.
Sure. So transitioning to something, Benedikt, that you mentioned on the you know, prediction side as it relates to data. I know, Jesus, that's something that you do quite a bit of work on. Can you speak a little bit to how, first off, at a high level, the technology behind some of the data predictions, and then as it relates to perhaps more both enterprise and institutional players coming in, what are the benefits there?
Yeah, so as a financial asset class, crypto is like a dream come true for this type of technology. So it's not only a 100% digital asset class, but it also it coincided that it came out when the machine learning space was experiencing a boom, right? So all these technologies around artificial intelligence has been, a lot of the research we're using today has been around since the 80s, and it was just not possible to implement. And then suddenly, with the advent of GPUs and all that, becomes possible. And then you have this type of asset class that it becomes almost like an ideal environment. So we have some theories about how this market is going to play out. Like, for instance, we think that obviously FalconX has spent a lot of time on this, but we think quant funds might be the dominant type of investment vehicle in this type of asset class, because over time, with that amount of data, it's just hard to think that discretionary investors will have any edge. And then the fact that the activity of transactions gets recorded in public ledgers, right, in some way or form, despite of all the manipulations and things that centralized exchanges do, you get some footprint, right, that you can analyze and you can extrapolate intelligence. So we think that that applying machine learning techniques could yield a ton of intelligence. That's from the alpha generating trading opportunistic standpoint. There is also a side of this that is any financial asset class to become legit needs a market intelligence layer, right? So there has to be analytics and intelligence that accompany these products as they get adopted by institutions. And so that's one. And then there is a third component of this that is often overlooked, is that blockchain runtimes could become sort of a runtime for a next generation of artificial intelligence, right? There are companies like Singularity and OpenMind and all this working on decentralized artificial intelligence, which is this idea that you can sort of decouple the power that all the Googles, Facebook, and all these companies have when it comes to create deep learning models and machine learning models and put it in a network in which people can share data models and things like that. So those three vectors we think are super interesting when it comes to data and crypto.
So do you think that, like you're talking about sophisticated investors and quant investors, like what do you think is the level of sophistication of investors right now? Is it like are crypto markets efficient, or are there still like high arbitrage opportunities, or what do you use?
Yeah, highly inefficient, like even, and it varies per segment. So I think, like for instance, when you looked at it from the quant perspective, a lot of the theories that focus on the efficient market hypothesis of factor investment and all that, they really don't apply in crypto. Like some factors like momentum and all that works, but when you look at things like value, another, like who knows what that is. And then you look into areas like DeFi that bake inefficiencies as a first-class citizen. So arbitrage is a feature, it's not a bug, right? It's just part of the ecosystem, and I think that's here to stay.
Yeah, and to add to that, I mean, there's rarely a conversation where we don't talk about the lack of standardization of data and just how much cleaning you need to do to, even start gaining hypotheses and understanding the data you're looking at, when it depends on different protocols, different platforms that you're using. And so I would say the sophistication is there. A lot of, at least the traders that we see come from traditional finance. And so they're trying to, as Jesus mentioned, apply a lot of the same solutions over in crypto, but to your point, it's still very inefficient.
Yeah, data is very small. The data sets are very small. There is a ton of market manipulation. The APIs and infrastructure are very bad, right? So you have exchanges going down all the time, APIs. So there is a lot of challenges that you just don't have in traditional capital markets.
Yeah, and I mean, to the point, going back to even the panel, I think that's a lot of the hesitation that's holding back larger players. One, obviously liquidity, and the other is just stable market analytics, stable data, lack of market manipulation. I mean, what's like a clear solution to that you think would really change the conversation?
No, I think time. I think this is gonna get better over time, and then the markets will become, so segments of the market will become more efficient. They will grow. There will be more data. I think this is still too early.
As a complete, in terms of cryptocurrency markets, I'm really an outsider or just amateur, but I've been in the space since 2011, and like the crazy thing is that like the volatility, for example, it hasn't really gone down. Like it was insanely volatile in the beginning. Like I remember it like went from it went from less than $1 to $32. That was like the insane event that happened. Like, okay, maybe we don't have 32x increases anymore, but like it's still, it jumps up by it can jump up by 10% on a random day without any news. It's
we call it regularly inefficient type of thing. Like I published a paper about these challenges in deep learning models that we never seen before. Like something like that happens, we have a month of no volatility and then it spikes, and you have a prediction model that never seen that before. So what do, right? If you've retrained the model for capturing that event, you're gonna overfit because that's the most current data. Right. But then if you don't, then it's probably gonna start making a ton of stupid predictions. Whether if you're training something against the S&P 500, it's probably gonna be fine. I mean, there are spikes, but it's nothing like you haven't seen before.
Right. Yeah. It's especially it can like have high volatility even after a long time of no volatility. That must be, it's wild.
How much of Twitter is impacting that?
Zero. I think it's zero. Yeah.
Really?
I think so.
Wow.
Yeah, I think so. I think there is a lot of hype about what natural language, like sentiment and all this. I think is zero. It's neglect. It's always a lagging indicator to what's happening in the market.
Oh, it's always lagging. Interesting.
Yeah, that is, wow, that's shocking. So I guess, obviously everyone loves touching on this topic as it relates to DeFi. What do you guys think both on the privacy side and the data side? Jesus, you mentioned there, it's some of the projects are older, but some of them are 3 months old. And so there's definitely a lack of history and data. And then Benedikt, curious on the privacy side, any projects that, sparked your interest?
I find the space fascinating. I think a lot of the project has a lot of intellectual and technical merit. Whether it's published or not, we'll see, but I think a lot of projects are here to stay. And I think concepts like automated market makers and things like that are not going to go away in the foreseeable future. So we'll see how it evolves, but I find the space incredibly fascinating.
Yeah, I agree. I think there's a lot of cool things happening, with all the stable coins, all the decentralized exchanges. I think, I think that for example, the decentralized exchanges, there's again, a huge issue of privacy, well, from multiple sides, but like, for example, one of them is front running. If you can exactly see who places what order, then it's very front run that's a huge issue for them. So yeah, I think that there's a lot of different places there where sort of the right level of privacy again becomes a huge factor, or would be a big win, I think. But yeah,
absolutely. Well, I was going to
say, how do you guys see DeFi FalconX?
Yeah, good question. So we are pretty excited about automated market makers. Obviously, as a centralized liquidity provider, these decentralized liquidity providers are, we see them less, I would say, as a competitor and more as something that partners what we're servicing. Because at the end of the day, when gas fees spike up, or if you are in an algo trader or systematic trader, you need the trade done quickly. And so if there's time lagging or the blockchain, then having that centralized, prime broker per se really helps in those situations. But at large, we're also super excited. I think it's sad to see that this only lasted 3 months. And I think the projects that are, there's actually solutions behind a lot of the projects that came out in comparison to 2017 and 2018 when I was at Pantera. And so excited to see how these continue to grow. I think a lot of good capital was deployed. And so hopefully we have longer runways for products to come out, but super excited. And the investors were really excited. So a lot of engagement across the board. With that, I definitely recommend everyone read the numerous papers between the two of you that you have written that references all of the stuff we discussed today, but really, truly a huge thank you for taking the time. This is really great, both on the privacy, on the data side. And again, thank you to LA Blockchain Summit for hosting us.
Thank you.
Thank you very much for having us.